right, welcome back everyone to another episode of Give Me Some Truth International. I'm here with Stan Farmer and Ian Beardsley. I'm Sil Michelin. And our topic for today, I think, it's kind of an interesting topic. So we're going to talk about foreign gifts specifically. But I think it's kind of an interesting topic because it touches on a few important themes that we've covered before on the podcast, including, expatriation and, how people need to think about the decision to, renounce U.S. citizenship. So I think we're going to touch on some really important points today, because just to share a little bit of background. So here in the U.S., the beauty of our tax code is we're generally free to receive gifts. As the recipient of the gift, we can receive gifts in any amount, basically.
That's true. Anyone, and I encourage this, can give me any amount of money.
Any amount of money.
And it really creates no tax obligation.
Someone could give you $1 billion, right?
Yes.
I could give you $1 billion tomorrow, and you would not owe taxes, you as the recipient.
I would be so appreciative.
Right? And you would not owe anything as the recipient of the gift.
Yeah.
Right?
Correct.
I may owe something as the person making the gift, but for you, it would be a tax-free event. And that's kind of the rule of thumb as far as the U.S. tax code is concerned. However, there is one exception to this, right? If I understand correctly. Just one exception, and that's what we're going to talk about today. And so this piece of regulation, I think, is also interesting because of just how long it's been around in various forms, but only now we've finally received the sort of final version of this regulation. But it's really something that's been kind of brewing for years. And so what's been going on, and why did it take so long to finally get to the spot we're at today now, where we have the final piece of regulation?
Regs on rules that went into force when you were probably still in college.
Right?
Yeah.
Almost. Because the genesis of this goes back to what? 2008?
Well, it's funny because I graduated in college in 2008. So
there you go.
So literally for me. So this, I can just go into a quick little history of
Give us the quick history.
Okay. So the HART Act, the Heroes, Earnings, Assistance, and Relief Tax Act of 2028 was passed in 2008. And that created this new taxation regime that we're going to talk about. Because it was new and radical in some sense and paradigm shifting in some sense, the Treasury Department had to issue regulations to explain to people how to comply with this new law. So the Treasury issued proposed regulations in 2015. So that's 8 years. And it took them 8 years to go from law to regulations. That was just proposed regulations. And as everyone knows, under the Administrative Procedures Act, you have to open up. Yeah, you have to open up for requests for comments, so the public has a chance to submit their thoughts and how they think that this should be implemented. And then it took another 10 years after those proposed regulations for us to get the final regulations. And so that was the precipitating event for this podcast, is in January 2025, the final regulations came down. So that's what
we won't blame the American Procedures Act, because I'm pretty sure it doesn't require 10 years of notice. Right?
No,
I think that's the longest I've ever heard. Yeah.
So, it's true also that in practice, I think, we've been aware of these rules, and we've been kind of operating under the assumption that, they would apply, and that they have been applying, right? And so if you go back to our older podcasts, in particular, the one about expatriation, I think we warned people about, the risks involved in receiving funds from, a person who was a former U.S. citizen who expatriated.
A covered expat.
Because that's ultimately the problem. So Stan, you want to
give
us...
Let's talk about the regulation. The actual HART Act rule first, because all we've talked about is how they put something out and then it took forever to get rules to explain how to comply with it.
Right.
So let's talk.
What actually is the substance of the...
Yes, the substance of what we're dealing with here.
So the heart of the issue is what's...
The heart of the HART Act.
Yes.
Exactly. Is the Section 2801 tax, which is tax on gifts and bequests given from covered expats, people who have expatriated, given up U.S. citizenship or long-term residency, a tax on funds given by them to U.S. persons. So it's essentially a 40% tax paid by the recipient who is a U.S. person. So it is technically an inheritance tax. So the normal U.S. regime is a gift tax. So the giver pays the tax.
Right.
This is an inheritance tax. So the inheritor pays the tax.
Right. So
it's a big tax.
So the irony is the Hart Act basically imposed a
Heartless.
tax on orphans
It was heartless. Yeah.
whose parents happen to no longer be American. How dare
Right.
they?
Yeah.
Okay.
So that's the issue, is that there's this new, no one in the U.S. is really used to paying taxes on funds they receive, because it's always been
All right.
paid by the giver.
Right.
So so something people need to be aware that they may have new obligations.
So at first blush,
Yeah.
right? To be a covered expat, normally in the course of things, you have to know you'll know you're a covered expat, right? Because you go through the process of filing your expatriation tax forms, and you also go through the process of surrendering your U.S. passport.
And you pay the 877A exit tax.
And unless everything falls under the exemption levels on capital gains and such, you might also pay an exit tax, right? So far this seems fair, and that's like maybe several thousand people a year at most become actually expatriate. Probably only a fraction of them become covered expats. So small sample size, right?
Right, because to be a covered expat, I mean, there's 3 criteria, but at the very least, you have to have a net worth, you individually, in excess of $2 million.
$2 million.
Right. We go through
so that already rules out
the income test,
the income test, the net worth test, and the tax compliance
and
test,
the compliance test.
Right.
But
So that rules out a lot of people.
So theoretically, this would apply to a small number of people, but I get the feeling that there are lots of other people that are impacted by this that are less likely to even know they're impacted by this.
There's the recipients of these gifts.
Yeah, but also maybe people who just, I'm thinking about the people who didn't realize that they had to formally expatriate when they expatriated, so to speak. Like the long-term resident.
True. Yeah. It's not just U.S. citizens. It's people who have given up their LPR, legal permanent resident status. It's a little bit broader than just U.S. citizens.
Right.
So the covered expat is expansive, and it could capture people that.
Yeah, technically it's anyone who had to go through the expatriation process, including long-term residents, right?
Yes,
right.
Long-term residents.
And it could also cover people who have had to, go through that expatriation process because, for example, they had a green card that they weren't using because, they had moved abroad. So there's lots of kind of weird circumstances where, you could be effectively forced to expatriate, even though that had not been your intention. So it's something that is not going to come up every day, but the consequences can be very, very serious if you make that mistake, because we're effectively talking about a 40% tax on the entire amount of a gift or an inheritance. So, we're talking about, for a few $1 million of, inheritance and estate worth a few $1 million, these are pretty big checks to be writing. So a very, very expensive mistake to make potentially. And I think what's interesting about this is we have a lot of discussions about expatriation with clients. We have a lot of expat clients, people whose lives have gravitated away from the U.S. and maybe they find themselves in situations where they're like, well, why deal with all the the complexities of being an American abroad, and maybe I'll renounce citizenship. And frankly, if you look at the income tax component of this discussion, and you look at, the possibility of paying an exit tax, for example, given the exemption amounts that are available, it may not be that bad. And for a lot of people, even if they were to expatriate as a covered expat and they had to pay an exit tax, they might look at the numbers and say, well, you know what, it's not that punitive, and maybe it's worth doing. But oftentimes they may not realize that, the most punitive consequences are not actually income tax related.
That they're going to bear.
They may not directly have to bear them, but they might have to do with things like what happens later in life. Mm-hmm. If, my children are American, or, there's American beneficiaries of my eventual estate.
Yeah.
That's when the real problems come in. And that's something that I think the level of awareness in the expat community, I think, has been fairly low.
I agree.
It relates to this particular issue. And part of it is because, it's been going on for so long and we never had formal, final regulation, but now we do.
I think many more clients would have gone deeper into the thought process of doing this, but I've always put a highlighter on that one, right? They're always, in most cases, there are still Americans in the family, or at least cases that we've dealt with, or that, clients of mine. And this has always been, well, hey, think about this real quick, right? If you're making the decision to expatriate, you may, you may be committing your kids to going down that path too, or else, right, what you're planning to leave with them, the legacy that we've, put into your plan is
might be
going to get cut in half, basically, right? Yes. So this is a big deal.
Right.
Yeah, and it's there's also some ambiguities about what is the status of gifts and bequests that were made, between 2008 and 2025.
Yeah, I mean, let's. And how does this all work, Ian?
Yeah, the IRS this has been called the deafening silence on the final regulations. I don't want to scare anyone.
It's too late.
On what the status of that. So I think people are making some guesses that
this is called give me some truth. This is not called make me feel better.
Feel good. Yeah.
Yeah. No.
I think it's at this point the likelihood is that gifts and bequests in that period would not be subject to this taxation.
Really?
Yeah, that's what I've been hearing. Because the final regulations that were just issued specify this starts on January 1, 2025.
Okay.
Yeah. So
interesting.
It doesn't explicitly say what is the status of gifts and bequests that happened between the passage of the act and this regulation. So that's something.
Penalties and interest. So now 40% has become.
Right.
We're just going to keep it all. Thank you.
If I can just jump ahead maybe to a little bit of a strategy on that point. So if you want to avoid the penalties and interest and the accuracy penalties and the failure to file penalties, what people suggest is filing what's called a protective return, right? So you can file. Another complication is that the form that you need to file this isn't even out yet. So separate topic.
Can you kind of make your own? Can you get artistic?
So we are anxiously awaiting Form 708. It has not been published yet. But once that does come out, people can file a protective return, which would start the statute of limitations clock. It would prevent any failure to file penalties. Mm-hmm. It would, you can basically file a return saying this is a excluded gift or bequest. So I'm making the position that this is not covered by this regime. And then it would be the IRS's job to come and say, no, this is a covered bequest.
That's also interesting because, I mean, you could imagine a scenario where, you receive a gift from a family member and maybe you're not sure about that person's exact, history and current citizenship position. Who knows?
Right. Thanks, Nana. And by the way, can I ask you a series of
exactly
questions about
precise,
your
questions? Yeah.
Can I jump in just before I forget on that point? This is one of the more colorful and controversial elements of this. The IRS has said that they will, in that case where you someone gets a gift or bequest and they're not sure about the giver's, the donor's status, the IRS says that they will, quote, allow people to ask them for the tax information of individuals. So does that mean that there's anyone can call up the IRS and say, what is the status of John Doe? And then they'll be able to disclose their status to the people. So there's some privacy concerns about that. So we're not really sure how that's going to work out. Yeah.
Interesting.
So there's apparently going to be a new system of the IRS disclosing quote unquote tax information, expatriate status to, I guess, anyone who asks.
Okay, well,
so that's a change in the what the current privacy status of the IRS.
This will shock our European viewership because they still have that naive idea that privacy exists in this universe. But
maybe after this there won't be any more privacy.
I just plan on after this podcast calling up the IRS and just randomly asking them about the status of people to figure out, do they actually just give that out to people now?
Yeah, and what are
and they might.
They haven't said what will be the requirements. Do you have to prove that you've received a gift from this person? Can you just ask about the status of anyone?
But so this is important. This is a key point because it basically means that effective this year, if you receive a gift from abroad, then you have an additional filing requirement, effectively, right? As soon as the
form is not out.
You will once the form actually comes out, right? So
presumably it would be published by the end of this year.
By the end of the year,
so it's for the tax. It's for the 25 tax year.
Yeah.
So something that again a lot of people may not be aware of, right? If you are a U.S. person receiving a gift from abroad, you may have an additional filing requirement.
Yeah.
So kind of an additional consequence of this new regulation.
Yeah.
So, we've touched on a lot of different points today. Obviously, this is a very complicated topic, and it's still, even though the final regulation just came out, it's still evolving. As you saw, some of the forms are not even available. So, if this is relevant to your situation, be sure to talk to your accountant as well. Don't take advice from us. Be sure that you can talk to someone who is aware of your own specific circumstances. But hopefully this was a good introduction to the topic. And thank you, Ian and Stan. And we're out of time for today, but we'll see you next time for another episode of Give Me Some Truth International. If you like the information we share, be sure to like and subscribe. And we look forward to seeing you next time.
Hit the like button, please. Thanks.
Walkner Condon Financial Advisors is a registered investment advisor with the SEC. Registration with the SEC does not imply a certain level of skill or training. The opinions expressed by the participants of this podcast are their own and do not reflect the opinions of Walkner Condon Financial Advisors. All statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance. Thanks for listening, and for further information, please visit WalknerCondon.com.